You mentioned before that you think that the Fed in their current position, they want a higher gold price. Would you go as
Absolutely.
far as to say that the Fed and the Treasury want a higher gold price?
Sure. Why wouldn't they?
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on, I think it's safe to say, what is an historic week, especially with a key statement that we'll be digging into from our new Treasury Secretary, Scott Bessent. And fortunately, one of my favorites to touch on all these topics and someone who often knows a lot of the things that most in the public don't have access to or don't see until years later, if ever. So, Tom Luongo of Gold Goats and Guns, it's a pleasure to have you back here today. It's great to see you in person a couple of months ago, and Tom even brought
Likewise.
me my own cigar to smoke with him outside. Don't tell my mom, but yeah, we had a nice cigar, and Tom, it's great. It was great to see you then. Great to see you now, especially with some for people who are wondering, would we get excitement and action when Trump finally came in? I mean, you can't say you're disappointed there. So a lot happening to dig into. And how are you?
I am very good, Chris. Thank you. And it was great to have dinner with you a couple of months ago. It was great that you guys were, on your way through and on your way to a music thing, a show, and were able to get together, have dinner up in Lake City, and it was great. And swap stories and music, and that was cool. And we've been already on the phone for like half an hour chatting about all the stuff that we do when we're not doing our day job, and the stuff that keeps us like reasonably sane, and in my case just barely. But no, it is great, thank you. And I can't I'm the joke that I've been running with a lot recently is, Mr. President, please, I can't handle 4 ribeyes a day. My gallbladder can't monetize that much fat. So if you would please have mercy and slow down a little bit so I can enjoy each savory bite of what you're going to do to this horrible group of people that have been ruling us for all these years, I would really appreciate it. It is, I jest, of course. No, keep going. It's okay. I'll figure out a way to, I'll figure out a way to deal with that fourth ribeye somehow. So no, it's all good.
I mean, it's definitely happening quickly, as you'll see here. Hopefully, we'll get to a bunch of these, but I mean, we have Elon Musk now talking about investigating the Fed with Ron
Sure.
Paul and a whole lot more. But Tom, why don't we first start? We're recording on Monday afternoon, and
Mhm.
as people, this will be posted Tuesday, but as I'm sure people will remember, we had a $45 day on gold in the futures, busting through the $2,900 level.
Mhm.
Silver hanging in there, but anything perhaps even going back as far as to when we saw this rally begin about this time last year. And I'll have some questions about tariffs, metal flowing to New York, but anything in particular that has stood out to you that you're thinking about right now?
Um, I'm not surprised by the rally in gold at all. As a matter of fact, I mean, the end of the year, there was a lot of end of the year profit taking in gold, I think, and you could just tell. I do this. I cover gold and silver for my patrons every Wednesday and every Sunday, and we go over it. At the weekly level, and the way I recharged using candlesticks, it was clear to me that gold was being, there was a lot of people just pulling profit, and with that, I knew that the minute we turned to the new year, then we'd get new investment um, themes coming from, people would start taking their new positions beginning of the year. Like, okay, so we were invested in this and this in 2024. What are we invested in 2025? Well, we made a whole lot of money in gold, but we took some profit off the table. But now it's pulled back a little bit. Gold still looks good, putting it back on and putting the trade back on. And I think that's not surprising at all. We had a 6 to 8 week consolidation period, and now we're moving out to the new into a new trading range. Certainly, I don't see gold slowing down until 3,000. When we get to 3,000, we're going to do round number bingo like we always do to invoke the late great Jim Sinclair. And that'll probably last 2, 3 weeks, maybe. There may even be 2 attempts at 3,000 before we push through. But then once we push through 3 grand, we'll go to 3,600 almost immediately. It'll light your hair on fire. I really feel that that's where we're headed in the gold market. Silver, um, Silver is getting ready to make an assault on 35. Let's watch for a weekly close. Actually, I'm going to do the same thing you've got, Chris, and pull up the the silver chart. But I don't look at the futures market. I always look at the cash market because I think the cash market is more instructive ultimately. But I'm looking at the weekly high close in silver from 2024 on the cash market of 33.65. Any close between 33.65 and last year's high of 34.89, a weekly close in there, we establish a weekly closing high, we'll set up for a new all-time, or new, not all-time high, for a new cycle high in silver. And once we break through 35, forget it, that high at 35, we can see silver run somewhere, and I don't know where it's going to go. It feels like it's building that kind of momentum. And it's very clear that I think that's what's happening. The attempt to hold it down below 31 has failed. So now it's going to have, so the shorts are going to have to retrench somewhere around, the 33, 34 area. And then again, like gold pushing to 3 grand, so silver pushing to 34. We'll do the dance for a little while, the same way that, Bitcoin's doing the dance around 100,000. And then eventually that dam will break, the bulls will overrun the bears, and then we'll move from there. And I think the whole argument here is that gold and Bitcoin both are moving towards the monetary system in a way that, they haven't been in the past. And we're going to see this in Q1. I don't think the Fed's standing in the way here at all. As a matter of fact, I've been arguing for close to 3 years now that I think the Fed wants a rising gold price. Because as we get closer to the U.S. adopting Basel III and physical gold being allowed to be used as a reserve asset at a 15% haircut as a tier 1 capital asset, why would the Fed fight a rising gold price at this point? The Fed has sincere issues with their balance sheet. They've got treasuries on their balance sheet that are underwater. They've got mortgage-backed securities on their balance sheet that are underwater. Jerome Powell can only get rid of 65 billion or so a month. He's got 6 trillion to get rid of. He wants to shrink the Fed's balance sheet. He wants to renormalize the yield curve and all of these things. And what better way to do so than allow his undervalued assets to rise in value? So that's what I think is driving this. I think this is central bank demand. It has been for over 2 years. And I don't think the Fed's fighting the higher gold price at all. Silver, on the other hand, as you well know, I'm not a fan of thinking of silver as a monetary metal at this point. I think of silver as a bleeding edge technology leading indicator for as an industrial metal, the same way that copper is your leading indicator for the traditional economy, right? And I'm watching copper as closely as I am silver, and copper's sitting here at $4.75 a pound. I know where are we today? We were at 469, 470 a pound right now in copper, which is a massive breakout, by the way, if you haven't looked at the copper markets. So silver and copper moving in concert. Oil's now getting off the schneid. Brent crude's back to $76 a barrel after, Trump scared the market for a couple of weeks. I think we're going to see oil steadily move back towards $80. Again, I mostly look at Brent crude because that's where the world mostly prices as a feature of Brent crude, as a premium or discount to Brent crude, not WTI. And it means that we're dealing with another round of commodity cost push inflation that's coming down the pike, and we can't avoid that. And so it may be actually part of the whole process of what Trump and Bessent and everybody are beginning to put the framework around, which is as they cut government spending and as they cut regulation and hopefully taxes and everything else, to then start the investment cycle at the bottom of the production stack. And that's going to put an upward demand on base commodity prices across the board. But that's also not only upward demand against a stagnant supply, because these markets are criminally underinvested in because they've been financially suppressed for almost 20 years now. Um, you know, that's also going to increase the value of them, the assets that they're based on. And so we're going to see, I think we're going to see a shift in some ways out of technology, which is why the NASDAQ is kind of trying to roll over. And we're going to see that money start to flow into the bottom of the production stack towards, everybody in this corner of the world wants to say, when are the miners going to break out? Well, they're starting to break out now. So I don't really watch all of the miners on a regular basis. I certainly don't watch the GDX. I mostly watch things like GGN, which is the GAMCO Golden Natural Resources Trust, because it's invested across oil and miners directly, and then runs a covered call strategy to try and pull yield off of that. And that stock is, inching its way along as all of these asset classes start to move in concert with each other. And as that stock starts to approach $4.50 or $5 a share, that's telling you you're in a big bull market across the commodity board. So,
yeah, and a good point. Certainly, to see what we will see out of the miners as they start to report earnings.
mm-hmm.
I mean, I remember the previous quarter we were saying, well, at $2,700 gold price, things are looking good. Not now. Not only do you have another quarter of having that elevated gold price, but now we're up at 2,900. So at some point, you would think we're going to have a good earnings cycle there. And Tom, many things you mentioned, which we'll have some follow-up questions. But where to begin first? I can't go elsewhere. Now, you said that the Fed at this point benefits from a higher gold price, and this came out. I believe you actually said this earlier last week. I saw it yesterday on Sunday and
Mm.
thought it was pretty shocking. I know you said that you've reported on this before it happened and you have a lot of thoughts. So, in case anyone has not seen it, here we have Scott Bessent on the left, Howard Lutnick, and I would like to get your comment also on why they're buying 2 billion COVID vaccines.
Well,
But
I have it on some authority that Lutnick is not well liked by the transition team, by the way. But we'll see. We'll see that he's not done. He's not as far along at commerce as he should be. So we'll see. Trump's management style is he doesn't like to fire people, contrary to popular opinion, and contrary to his personal the image he likes to portray. He actually likes to allow people enough rope to hang themselves. So we'll see how long Lutnick survives at commerce. That's what I've heard. That's what I think is going on. And Lutnick's he's got his own ideas about what should happen here. I don't think he's really in charge of what's going on. So I'm just putting that out there.
Alrighty. Well, certainly a lot happened in under 3 minutes here, but let's take a quick listen here.
We're going to stand this thing up within the next 12 months. We're going to monetize the asset side of the U.S. balance sheet for the American people. We're going to put the assets to work. And I think it's going to be very exciting. We're going to study best practices that's done around the world. It'll be a combination of liquid assets that we have in this country as we work to bring them out for the American people.
Okay, Tom. What assets do you think he's talking about here?
What assets do I think he's talking about? Well, I can start with let's start with gold, obviously, right? There's the gold is still held on the Fed's balance sheet at the price that we sold it to back in 1971 at $42.22 an ounce. It's clearly worth a lot more than the $11.04 billion that it's held on the Fed's balance sheet. The Fed's got massive holes in their balance sheet from the mortgage-backed securities and the treasuries that were bought under Bernanke and Yellen, and to a lesser extent under Jerome Powell. But Powell's gotten rid of all those. All the stuff he did during COVID has been pulled off the Fed's balance sheet and more, which is important to understand that now the Fed has a smaller balance sheet than it did before COVID. So however much you may or may not love the Fed, understand that Powell's at least doing the right thing now to correct what was done during COVID, which was unprecedented in the history of of our markets and our politics. And I don't even know that, and I know that'll make me sound like a Fed apologist, but when the Treasury market goes bidless, I expect the Fed to step in and do something about it. Sorry, that's just the way the world works. I don't want to live in Mad Maxim and eat friggin' dog food. Just not doing it. But that's what would have happened had the Fed not stepped in. So therefore, I kind of like living in a reasonably first world country. You do what you have to do when the Treasury market seizes up like that. Now, how that happened, well, that you can get as conspiratorial about that as you want. What Bessent, I think, is talking about here is, and I've talked about this in on other podcasts, throwing it out there, that I think what they really want to do is, there's a lot of assets that we have either built up within the federal government itself. There can be somebody floated today the idea, well, they're going to sell some assets off. Well, that's not a bad idea, to be honest with you. When I watched them like taking the nameplate off of the USAID building, I'm like, well, why don't you sell the building? And no, what they did was they gave it to Border Patrol, which was even okay. I was like, that was better than selling it, because that's even more of a knife thrust to these evil globalist bastards that have bankrupted us. No, I think that part of what he's talking about here is the obvious thing of, we are going to deregulate the economy and whatnot, which will help to monetize assets that are being suppressed from actually being deployed. That's one. But the big one here is the housing market. Okay, Bessent understands that there's $36 trillion worth of equity in housing in the United States. Okay, $36 trillion, which can be monetized at a positive yield spread, okay, through a mixture of tax incentives and whatnot, that would have people pull that money, that equity out, and put it to work. And if it's done in such a way that to get them a positive yield spread and push that money into the economy and push that investment capital into the economy, that will change the game completely. Moreover, we have already seen, with just what they've done so far, gotten pledges from foreign investment to come into the country. They want to lower the corporate tax rate. They want to radically deregulate the economy. I've heard they're going to go after OSHA, for Christ's sake. Okay, if you start really doing if you really start thinking about this stuff, getting rid of those things, okay, changes the way we use capital within the U.S., which is clearly designed by foreign actors to make our economy less efficient, or a reflection of the efficiency of everybody else's. Never forget that we were operating with Yellen and Bernanke and all these freaking globalists under OECD rules of wanting tax harmonization and all the rest of it. So there's so many ways to skin this cat. And there's another thing to think about out there, which is that Fannie and Freddie were taken into receivership. Fannie and Freddie make like $150 billion a year. They have no governance, and they're trading for like $6 a share. I think when you start to think about how much the Treasury owns, what that's worth, and what that could be worth on the open market, there's a massive amount of money that can be brought in to the Treasury and deployed to start the rebuilding process that I don't think anybody's even looking at. And I've done some back of the envelope calculations about this when this idea was first presented to me, and we're looking at trillions of dollars in value locked up currently in Fannie and Freddie shares that the Treasury owns as potential market, when they're as marketable securities. So that's one aspect of it. The housing market itself and the assets that we're not utilizing are the fact that we've been running these deficits knowing full well that we had these assets sitting here locked up is criminal. And everybody involved in the Biden administration that was holding this stuff back is you know, guilty of treason in my mind. I'm dead serious when I say all this. Like, we don't have, and we're just finding out in a week and a half or 2 weeks of Elon Musk and a couple of kids going in with laptops and running and mapping the payment system of the administrative state aspects of it over the last 60 years. Find out how much money of ours that they've been wasting, sending overseas to run operations against us. We've been funding our own destruction as a society for the last 50 years, these people. And it just that alone balances the budget. I was talking to a friend of mine the other day, and we're looking at $1.3 trillion in cuts that have already been identified that are coming to the federal budget this year. 1.3 trillion. And if that's not going to unlock the American economy, I don't know what is.
Well,
gold and silver prices and all of that other stuff. And how are you going to move that money into the economy? Well, clearly, one of the things you could easily do here is start issuing partially gold-backed assets for American people to buy, and only Americans to buy, verified, which is money that would then circulate domestically, not internationally. We're all used to living in this world where the money goes, we print the money and it immediately goes out. No, we're putting up capital controls around this. I know you talk to Vince Hanchi on a regular basis. Vince and I have been talking about this, about putting up, walls around capital flow out of the United States, hard asset capital flow, not leaving the United States for almost 2 years now. So we're now watching them talk about it in real time. They're not going to tell you exactly what's happening, but having looked at some of the stuff that's out there and talked with some people who were somewhat, they see the same things. And they're like, yeah, no, there are many ways. I've been saying for a long time, there are many ways to skin this cat as to how we recapitalize the United States. People oh, no, the United States is broke. No, we're not. Because one of the things that we have to remind ourselves of, Bessent said it during his confirmation hearing. We don't have a revenue problem. We have a spending problem. We spend too much money. We bring in X, we spend more. We spend $1.7 trillion more than X. That's ridiculous. Jerome Powell's been screaming about it as Federal Reserve Chair, even though he's not supposed to be able to say anything about it. What has he said? Multiple times at both FOMC pressers and Humphrey Hawkins testimonies and Jackson Hole speeches and everywhere else. Unprecedented for a Fed chairman to say this multiple times to Congress and to the media. Congress has to get their fiscal house in order. Monetary policy can only do so much. And clearly, under the Biden junta, and I refuse to call it the Biden administration, under the Biden junta, their goal was to spend us into debtor's prison because they were not working for the United States. I listen to Elizabeth Warren, and every time I listen to that bitch talk, all I can hear is, I'm a traitor. I'm a traitor. I'm a traitor. I'm a traitor. Over and over and over again. It's the only words that ever come out of her mouth. And she's not the only one. And they're this way because they have never worked for the United States. Whether they work for the continental Europeans, which I call Davos, or they work for the city of London, everybody who's arguing against tariffs, replacing the income tax, as far as I'm concerned, neoliberal works for the city of London. Because I hate gold and hate Bitcoin and hate this and hate that. It's all nonsense. You hate bearer assets in a debt-based world? And yet all the central banks are all repatriating all their gold and buying it. Well, what have we been talking about for 3 years, Chris? What, 15 to 20% of annual gold demand is now central banks trying to shore up their balance sheets? Get with the program. Anybody who's telling you that gold's not a partial solution to this problem is lying to you for their benefit. And you need to stop listening to them because they don't have the moral high ground. And we should just stop listening to people invoke morality when we know that the people doing so have no morality. And I would put Elizabeth Warren on that list, and I put Hillary Clinton on that list, and I'd put everybody who talks for the European Union on that list. I put every person associated with the British government on that list.
I hope to one day be able to opt into a PDF download to get Tom's full list. That would sign up to Gold Ghosts and Guns now, and you get the list of politicians.
And I will invoke the George Carlin at the end of the seminal thing. It's Carlin Carnegie when he's like, he starts doing the 7 dirty words. He's like, I've added some words to the list and it's a little bit longer. And he pulls out the scroll. And the last 5 minutes of the show is him just reading off all the dirty words. I'm like, yeah, that list is that long. And it's this 50-foot long scroll of people. Yeah, that list is ridiculous. So. And and if I'm doing it, every one of those people has a dirty word associated with it just to keep invoking the Carlin because, George was a genius.
Hit the subscribe button. Tom will bring the list next time. Although, Tom, you touched on it, although I'll ask a bit more directly in terms of the other half of that. What do you think they are or are not saying about gold, or what do you think in this equation of what he described here? Put more bluntly, are they getting ready to do some sort of gold revaluation, or what would you say in terms of comments specific to gold?
I don't know. I mean, I'd really maybe I don't think they want to do anything that drastic, Chris. I think they'd really rather unlock the other assets first, and then just let the natural inflation that occurs from that take gold wherever it needs to go. Again, one of the things that I talked about a lot last year, and again, many of the things that I've talked about in previous times I've been on your show and I've been on other people's show about how to deal with this problem was I was operating under a 1 or 2 sigma, the standard deviation from the mean of where we are today. We're in a 6 sigma world. Like, I never expected to see what I thought I understood what was coming. I had no clue. I will cop to this. No problem. I'm happy that I was wrong. That I thought that there was, I expected that if we had gotten half of what I've seen done in the first 3 weeks, done in 4 years, I would have considered this the most successful administration in my entire life. And yet we're 3 weeks in and the Department of Education is gone. USAID is shuttered. Like the National Endowment for Democracy. What about a full DOD audit? We're at the point now, in a week of this, we have normal, middle-class, hardworking Americans saying, I don't want to pay income taxes this year because you people stole my taxes for the last 20 years. America's on the verge of a tax revolt, the likes of which we haven't seen since, I don't know, December 16th, 1773 or 4, whenever I remember the date of the Boston Tea Party. I don't remember the year because it's the same day as Philip K. Dick's birthday and the Ron Paul money bomb and Beethoven's birthday. It's all December 16th.
I think you need to host a modern day tea party, Tom.
That would be hilarious, right? Somebody wants to make me a tri-cornered hat with the cigar, and I'll
you host the party. I'll find a hat.
That'd be good. Especially if somebody will invite, somebody also has to make an effigy of King Charles, so I can throw that, I can light it on fire and set it and throw it into, I don't know, the backyard. I've got a fire pit out back. We'll just throw Charles onto it, and we'll do it properly. But it should be an effigy of Klaus Schwab. Never mind. I want to keep it clean. Like this, let's just go. You can imagine what I think. What South Park image of Klaus Schwab and King Charles should be doing in effigy while we burn them. Go with it. Your creativity. You fill in with your own creativity, folks. I won't I won't sully Chris's show with that image. So explicitly.
That,
No.
that'll be your other opt-in bonus.
I mean, look, we should enjoy what's happening, and at the same time, understand we should. What you're really asking is where we're going to head, where we're headed from here. I don't know. Um, I think that what they're hoping to do is to make a substantial cut this year to do as little real harm to the U.S. economy as possible. Like everybody's worried, oh, if we cut 1.3 trillion in spending, that's GDP deflationary, and it's going to be a recession, and blah blah. Well, no, not necessarily, because if we also cut taxes and we cut regulations and cut other spending, that's money that's not being garnished in taxes. That's money that's going to freely flow and circulate and build wealth within the economy. We're also going to invite capital in from overseas. Right now, I mean, the Japanese have already talked about investing over $1 trillion in the United States. If Trump cuts the corporate tax rate to 15% for businesses that are here, right? I mean, that's a huge, it's a huge sum of money, and they're not the only ones that would do that. So let's not, this whole kind of old Keynesian bathtub economics nonsense, it needs to go away. Like, you really need to stop looking at the economy as, just this big bathtub that needs to constantly be filled with government spending. It's a bad argument, and it's a bad model. And it's always been a bad model. And counting government spending into GDP is pathetic, and it needs to stop. It just need, I can come up with more stronger language than that, but let's just go with pathetic. And let's get back to spending money on things we need, as opposed to just spending money on things we don't need and calling it GDP growth. Like, who cares about GDP growth? It's a bad friggin' metric. Gross national spending. So we count all the hookers and blow. Got it. And we consider that growth, not negative growth. USAID was $46 billion worth of US GDP that was wealth destructive around the world. Right? Did it build wealth, or did it destroy wealth by fomenting wars and color revolutions and all the rest of it? Did it create wealth, or did we just spend money to destroy people's lives? And if you think that that's a rational economic model, well, I got Basic Economics 101 I got to send you back to, and I've got a copy of Harry Hazlitt's Economics in One Lesson for you to read. Sorry, reality says the broken window fallacy is still a fallacy. But Paul Krugman never met a broken window he didn't love. So I wish he would have cut himself with the glass one of these days and just put us all out of our freaking misery with that douchebag.
Yeah,
okay, sorry. Yes, Chris, anytime.
Another important economic concept right there. Although people could go to Gold, Goats, and Guns, where you get the Tom School of Economics, which I guess, and from the Tom School of Economics, you mentioned before that you think that the Fed in their current position, they want a higher gold price. Would you go as far as to say that the Fed and the Treasury want a higher gold price?
Sure. Why wouldn't they? Treasury wants to issue. I think Treasury wants to issue an asset-backed domestic dollar to circulate next to Federal Reserve notes. I think the Fed needs to go back to its Banking Act of 1935 conception, its original conception. The Banking Act of 1935 is what changed the Fed into its current monstrosity today, with the FOMC, the singular Fed funds rate, all of that, right? In effect, doing away with the federal and the Federal Reserve, which was a federation of 12-member banks, just like the United States is a federation of 50 little countries, right? We happen to call them states, right? For people who talk about federal, we don't have any federalism left, and we need to get back to federalism. So why wouldn't we want the Fed to? I think what we should have is a Federal Reserve that acts as a lender of last resort, if we're going to have a Fed at all, which I think at this moment in time we still need to have a Fed. Okay, that should be a lender of last resort to the domestic banking markets. right? So that, we have booms and bust cycles, which are a natural part of the business cycle as malinvestment builds up within any system, any economic system. The question is whether we exacerbate it, the highs and the lows, by tinkering at the edges with monetary policy.
Well, that is part one of this interview with Tom Luongo, and certainly a lot of fascinating things that he shared amidst some historic events that are taking place in the markets, and really grateful for Tom that he came and joined us. Don't worry, part two is going to be coming up in just one day. Although if you want a little more Tom in between then, you can find his Gold, Goats, and Guns at tomluongo.me, which is also in the description field below. And if you'd like a toy to play with while you listen to and read Tom Luongo, we have designed our Silver Chopper Ben Bernanke 26-ounce 3/9 fine silver statue, where you can get Ben Bernanke throwing $100 bills right into your kitchen. And it's got 2 spinnable propellers in there and a dashboard. And if you'd like to bring one of these babies home, well, you just click in the link below and you can find out more. With that said, we're going to wrap up for today, but thanks for tuning in, and part 2 coming up tomorrow.